Hello. Welcome to day number 13 video number 13 as we go through the MLFX beta. Been doing some live trading today and also yesterday using some adjusted rules. I've now started to, now that we've identified the system as profitable at a 1-to-1 ratio, with on average about 65 to 70% accuracy, depending on which pairing you're looking at and which signals you're taking. 60 to 70%, that range. Now that we've identified that, we want to obviously try and maximize the profitability. So with that comes a lower accuracy in terms of successful trades, yet a much higher return on investment, because investing at a 1-to-1 ratio is not a good idea. Like, nobody should be doing that unless you have something that's sort of consistently 70 to 80% accurate. Even at that point, you're likely going to earn a ton more if you lower the accuracy by focusing on the actual risk reward, and instead of only getting a 1-to-1 ratio, you might look for a 1-to-2 or something along those lines. Because it surprises a lot of people to realize that with a 1-to-2 risk reward, you really only need a 33 to 34% accurate system to be break even. 40% accuracy at 1-to-2 is quite good. You know, you're healthy with your profits there. Anything above that is going to be really, really good. So when I started looking at the system over the last couple of days, I was thinking, well, you know, what kind of risk rewards can we look for? So I looked at between 500 and 1,000, probably about 700 or 800 different trades that the system has given over the last week and a half, right? We have all this data, we have all this information. It's stored for us on the analysis page, which I'm going to open up. And I'm not taking this AUD USD trade here because of a few things. Although I've identified there is a trend here, there's an uptrend here on the 15-minute chart. When we go to the 4-hour chart, a couple of days ago I identified that there is this channel here, this sort of wedge channel, and it's getting to the upper threshold of that channel. So now that it's given me a buy signal, that in my mind is just against what has been happening. I captured a really nice profit taking a trade down here. I think I captured that profit. Maybe that was my loser. It was just a loser. Yeah. So I almost captured a profit. We lost on this trade yesterday. Before I jump into what I was going to talk about, we lost on this trade yesterday because we got in, I think, here. Let's figure it out. What was our entry price? 69578. 695. Must have been on this one. 69578, roughly there. So we knew it was going to head up, but unfortunately it shot down in between. And looking at this trade, I think we got down on this pullback here. Or maybe it was here. I think it was here. Does it say the time? Entry time 14:20. 14:20. Okay, no. So it was here. It was sort of on this, after this red candle, and we were predicting continuation of it towards the top. So unfortunately it pulled back and we got stopped out before it continued on its way. We were looking for a 3-to-1 return on that trade, so we were looking to take our profit at around sort of this level, but our stop loss was around this level. So just unfortunate on that one. We did have two other good winners though. One that copped a 4-to-1 or a 1-to-4 in terms of our risk reward ratio. So we returned 4 based on our one risk, which was very nice on the Euro Jappy, and we'll look at that trade shortly, but you can see, you know, 305 versus the loss here, and 132 versus 70, and 96 versus 77. So the objective was really to just make our wins far outweigh our losses. so that we could afford to have a couple of losses without it damaging our profits too much, because that seemed to be the case. We'd go through a bad period, we might have 3 or 4 losers, and it would wipe out the majority of the winners that we'd had, which is not a good way of doing it. So we went through all the information here, or I went through all the information for the last week and a half, looked at all the trades on the AUD USD, Euro JPY, and GBP USD, the British pound and the US dollar, and looked at those pairings, because those are the only pairings that we're actively focusing on and trading at the moment through the system on the 1 hour period, and that's because they're the only ones that are predicting anything decent in terms of moves. As I've said in previous videos, we are going to work on some adjustments that will affect the overall predictions of the other pairings, meaning that they should start predicting above that 8 pip threshold that we're looking for. So that's all good and well, and that will happen with time, but we just wanted to focus on these pairings and what we can do right now to try and turn this into a very profitable system. So I looked at all those trades and I plotted everything out on a spreadsheet. It's not the prettiest, but let me just talk through it really quickly before we really start focusing on trading. So we had the different signals for each of the pairings. I'm just going to run through the AUD USD, and then everything else apart from the GBP is similar. So we got the very weak, strong, and very strong. I then looked at all the charts for every single trade that was given, figured out how many of them were losers for each of the signal strengths. We haven't been getting very many very strong signals, and that's just, we may tweak things a little bit to make it so we do get some of those in the future. Then looking to see at a 1-to-1 risk reward based off the predicted move that we have, so based off the predicted change, meaning that our stop loss is 14.3 pips below this number, and our take profit is the same above for a buy and switched for a sell. So at a 1-to-1, then at a 1-to-2, then at a 1-to-3, at a 1-to-4. And with the AUD USD, I found that the 1-to-3 was the best in terms of the return, risking 1% per trade, how much we were going to return. So over the last week and a half, we would have had a 147% return if we'd taken all of these 154 trades, if I'm doing that correctly. Those two numbers added up. Yeah. So pretty outstanding, really. That was just based on this number here, and then after we factored in the losers and minus them out, it would have been an 86% return. So getting a bit ahead of myself there. So, and then it dropped off a steep cliff to 1-to-4. We would have only just been profitable, pretty much break even when you take into consideration things like fees, overnight charges, and spread and those kind of things. So even with those taken into consideration, I would say we'd probably be looking at least 70% return over the week and a half at 1-to-3. So that was a good indication, and that's just looking at adjusting the risk reward, and that takes it from what it was 32% up to 86. So a massive step up there just by focusing on that one thing. This may not be consistent. That's the thing. We may not get these results week in and week out. So I'm going to have to continue to test this and check this for at least the next month before I'm confident. So every week I'll be adding to this tally and seeing if these numbers start to change in a negative or positive way, depending on which way it goes. So yeah, bear in mind this is only a week and a half. It's hardly enough information and data to be conclusive, but it is a good indication that there's something to look at there. We'll also, instead of me doing this manually, which is very tedious, yet informative because I'm able to check every single chart for every single trade that is being given, or signal that is being given, which is very, it's a good process to go through because it helps us to pick up which trades are happening consistently, which are consistently bad, so we can try and remove them, and various different things. So I actually quite enjoy it for that purpose, and I think it's very valuable for that purpose as well. Then we had the Euro Jappy, which had an outstanding return there at the 1 to 4. So we had a 92% return over the week and a half at a 1 to 4 risk reward ratio. Then we had the GBP USD, which wasn't so hot. They had a much better accuracy, and I'll go this way so we can actually see. So we got the accuracies here for the different signals. Bearing in mind this top one here is the very weak, then the weak, strong, and very strong, because we don't have enough data for very strong. It's not really, there's no point looking at that at this point in time. But we have, 61.29%. And then I took the best risk reward ratio we had and figured out what the accuracy was for that. So even at 1 to 3, we were still 60% accurate, roughly, 58% accurate on the very weak, 38.46 on the week, and 32.14. So no doubt once we get more data, these numbers will start to look quite similar. But it's still very cool to see that. Even at the very worst side, we're just below break even, and at the best case, we are hugely profitable. Did the same then for Euro Jappy. So we started off very weak. We were 53.3% accurate. The week 77.42, strong 58.14. And then at the 1 to 4 risk reward, we were fairly similar across the board at about 30, let's just call it 33.5 to go in the middle there, somewhere percent accurate. So that's a hugely profitable system. It may not sound very good, like, oh, only 30% of the time you're accurate, but you have to bear in mind, to be profitable for a 1 to 4 system, you only need above 25% accuracy. So we're, on our way to 10% over that, and that's including every single trade. So that's not actually looking at the charts and being like, okay, this trade doesn't have a huge potential for upside because it's near some hugely, volatile resistance or support, where I know there's a lot of support or resistance from institutional investors. It's not, looking at the charts like this that I've plotted out and thinking, well, hey, look at the trend for the last couple of days. It has gone and bounced off this level multiple times, and it's been very profitable for us if we've continued looking for entries here. So if we had a signal down here telling us to buy, I'd be like, hell yes, I'm getting in there. That's a good trade. Same here. And that's what we did yesterday. Unfortunately, it didn't work out for us, but it's about stacking the odds in your favor. So taking a buy right now, although it's looking like it might head up, our upside is pretty limited and it's a high risk level. So we look at this sort of the 1 day, and we've got this level here that we're almost in line with. And if we're looking for because we're on the AUD USD, if we're looking for that 1 to 3 risk reward, we're looking at risk sort of 10 pips down, 10 to 15 pips down. So somewhere just below this level here, right? So it's a good position for a stop loss, but then we're looking to have our take profit 3 times that. So 30, where's our level? Here's our levels. So we're looking to have at least a 30 pip, probably 40 to 45 pip take profit. So we're looking to go pretty much in line with the all-time high across how many months this is, going back to September 2019. So September, October, November, December, plus another 6. We're looking at all-time high for the last sort of 10 to 11 months, which you don't want to be. That's yeah. Although it might, I would not be confident in taking this trade. So that's why I've not taken this trade. And then finally looking at the GBP USD over here, which was the least profitable of the systems across using this method of adjusting risk reward. So initially I did one pass, and I did the same risk rewards as above. So we were looking at, sort of like 1 to 1, 1 to 2, 1 to 3, 1 to 4. But I found even at 1 to 2, it was less profitable than at the 1 to 1. But I did notice when I was looking at the price moves that probably 1 to 5 would be profitable, and maybe 1 to 7.5 or something around there. So I went back again today and looked at those numbers. Let me just check we've got nothing coming in. No, we're good. So went back today, checked those numbers, and found that at 1 to 1 we were looking at a 43% profit for the last week and a half, but then at a 1 to 5 we're looking at 55.5, 1 to 7.5, 1 to 1.7.5. Too many points in there. You get what I mean. We're looking for 54.5 as our return. So it started to go down slightly. So based on that, we were going to use the 1.5. That is what I'd been using anyway. I figured out that was probably the best bet for us, just based on yesterday's investigation, analysis, as the page is called. So with that information, on today's pass, I also checked to see whether or not making adjustment to our stop loss. So instead of using just a flat 100% of the predicted move, what about using 80% of the predicted move? Because small changes there to where we put our stop loss means that we're then increasing that risk reward substantially. Because although we may be using, say, initially a 10 pip stop loss, that means if we were using a 1 to 1.5 return, we'd be looking for 15 pips as return. So regardless, that number's staying the same because we've already met that target for X a number of trades to ascertain that that is a more profitable system than this one. So then by adjusting our stop loss, we keep our take profit the same, but we tighten that stop loss up a little bit, which means that our risk reward also goes up, because instead of risking 10, we're now risking 8. So instead of it being a 1 to 5, a 1 to 1.5 risk reward, we now turn that into something like a 1.8 reward. Let me figure out exactly what it is, but so it would be 8 divided by 15. Whoops, not 18, 15. I think. No. What am I looking for here? Other way around. Silly. 15 divided by 8. So it'll be 1.875 instead of a 1.5 risk reward. So making that change, to cut it short, meant that we went from having a sort of 55% profitable system there to having a 76.875% profitable system, and even slightly more profitable on the 1 to 1.75 risk reward, which I think bumped it up from 1.75 to something like 2.2, all things considered. Now, this is just the first number I looked at. I think we'll probably look to go even a little bit lower than that. It does mean you have a few less winners. So instead of having only 42 losers, we went to having 48 losers. So 6 more of the trades that were profitable went to losers. But that's fine by me. That obviously was a small enough number for it still to be a good effect overall. So we're going to look into that and continue to tweak those numbers. I think, in all honesty, we could probably get this down to maybe somewhere around the range of a 0.65. So 65% of the predicted move is the stop loss, which would be huge. But that's probably something we're going to wait for having everything automated to do, because otherwise it's just going to take far too long for me to go through and painstakingly check every little point here and there. So it'd be a much better thing to be automated for my sanity. Right, so we had a trade that's just come in, Euro Jappy. Let's have a look at the charts. Immediately I'm thinking that's a good looking trade, and it is brilliant. So I'm going to get in this trade. Let me just enter the information. Oh, I don't have it in here. Whoops. 22. Oh, no. 11.1. Let's hope it hasn't moved too much. What are we looking? 22.2. 22.2 was slightly above that. Let's hope it pulls back a little bit. Ooh. Let's add it in as a pending order. So I'm hoping it just pulls back down to that level, because this is a reasonable trade. You know, it's in an uptrend. We won a trade yesterday. I think we entered here, roughly, and we caught our 40 pip move sort of at this level. So it's pulling back to this support level now. It's broken through it. It's tested it once. It's, well, kind of once on the 1 hour there, and it's testing it again. If you jump down to the 15 minute, it should become a bit more evident. Tested, sort of broke through, up. To me, it hasn't really indicated that it's got too much strength in a downward move here. Let's have a look at the 5 minute. Seems to be making its mind up here. So we almost got our order filled. And come on, spread needs to catch up. Oh. Okay, we're in, yeah. So let's set up our take profit and stop loss. So it's a 1 to 4 we're looking for risk reward on the Euro Jappy. So we've got about a 10 pip stop loss at 2089, and we're looking for 2644. Whoops. Yep, so I like where that stop loss is. Could be a little bit lower underneath this area here, but we're going to leave it there. And our take profit, we're looking in this range, which if you look at the 1 day, it has gone to those levels. And you look at the strength of the move over the last couple of days, it looks like it's probably going to continue its upwards momentum. So I like that trade. I think that's a pretty good trade to be in. It's not the best, but you can see it's hitting some resistance at this level, and overall we're in an upward trend. So we're trading with the trend. We are not trading it sort of after a highly volatile upwards move. We're trading at the bottom of what appears to be a pullback to that now hopefully support level, and we got in at a good price. We have a stop loss at a reasonable level, not the perfect level in my mind, but I think low enough to stop us from, you know, losing due to volatility, and also that if it does reach that level, it should be enough of an indication that the trade is a bad trade, right? Or the entry is a bad entry at least. Well, I mean, obviously that's what a stop loss is for, right? But it looks like there's a possibility that it might heat up, so we will just let that run out and see what happens. So while we're on the Euro Jappy, let's figure out exactly where we got our entry point yesterday. So let's trade here, and we had our entry at 121.946. And what time was it? 13:35 yesterday. 13:35. Yeah, so it was around this level after this very strong sort of upwards move. And it was good because we were immediately sort of in the green, 20 pips or so within an hour or two. Then it pulled back down, yeah, sure. So, if we had set our stop loss to be a little bit higher, we would have been stopped out of that pullback. I don't like doing that. I like to, at the very greatest move of my stop loss, I would probably put it at break even if it had been positive, 30 pips or so. Let me just check we are at the right level. So we're a little bit higher than that, so it was a couple of pips above where I was at 946. So there. So we would have still been 27, which was around about 60% of our take profit. But I did not put my stop loss to break even, because what I'd looked at yesterday had indicated to me that sometimes it would pull back, after going sort of 20 or so pips positive, it might come back and touch that stop loss as a sort of a new support level, because often we were getting in at levels like this where it was clear support or resistance, and the chances of it coming back and touching it, or almost touching it like this, are very high. So you might go a little bit negative in this instance and you might get stopped out, but it's just, it's a fake reversal and it's just a continuation. And I found that was happening quite consistently. So if I was to move my stop loss to 0, I would be removing, X number of those trades as profitable trades, which could drastically reduce the profitability of the system overall. So as the system was, or as the results were that I found, I'd not factored in moving my stop loss at all. So that's what I did. I left it pretty much exactly where it was. I think I moved it up 20 to 30%. So I was only risking, instead of say 10 pips, I was now risking sort of 7 or 6 pips. So a little bit of a consolidation there to my risk, but overall didn't really do much to it and just sort of let it run, and it worked out well for us. But I'm enjoying, and I think this is a much better way of doing it. Like, I always knew stacking the risk reward in your favor is the way to go, but I didn't realize it would be this much more effective. Only after 3 trades, we've taken 4 trades since I started this. Yes, we've probably been a little bit lucky in that 3 of them have been winners and only 1 of them's been a loser, but we add up our winners, so 300, so that's 400 plus that 530, and all of our losers will be about 77-ish. So what did I say? 430? 530. Sorry, missing 100. 530 divided by, let's just call it 75. So we now effectively -1, because we have had 1 loser. We could now effectively lose 6 trades in a row, and we'd be break even basically, which is awesome. That gives me a lot of confidence. It means that we don't have to be perfect, but in all honesty, if we can't win 1 in 6 with the system that's sort of 40 to 50% accurate at this range, looking for the risk rewards that we're looking for, then we're probably doing something wrong, and we're probably not trading with the trend, or we're doing something wrong when it comes to our trade analysis and the taking of the trades. No doubt we'll have bad periods though. No doubt there will be periods where we probably will get those 6 losers in a row, and that's just the name of the game. But we're probably overall, you're going to be looking, if you're looking at a 40 to 50% accurate system, you should be getting 4 or 5 winners in a 10 trade period, spread out. Obviously it might look more like 2 winners in a row, 3 winners in a row, 5 losers, 2 winners, something like that. But it should all eventually even out, and that's when you become profitable month to month, that kind of thing. Because people get caught up on the days, right? Think, oh no, today I lost 3%, 4% of my account, it's all over. But then you see that they've had maybe 18 out of 22 trading days in the month, bearing in mind that Forex is a 5.5 day a week system. So over the course of a month, you're looking at about 22 days. You've had a couple of net red days, but the majority of them have been profitable when you wound up with a significantly profitable system in the 10 to 20% range for that month, which I feel could easily be attainable with the system that we have at the moment, let alone the system we're going to have in the next 3 to 6 months. So it's exciting to think about, trying not to get too far ahead of myself as we watch this Euro Jeppy try to make up its mind. If anyone has any questions while they're watching here about the system and what we've got planned for it, feel free to leave a comment down below. I'm more than happy to get back to everyone who answers, or asks rather, questions. And if you do want to continue to watch these videos, as well as the live trading that I'll do once we've proven this is a profitable system on a demo account using the beta, and we go live with a live account, then please do subscribe to the channel, as well as hit that bell notification so you're notified when that does happen. So you can see we're kind of getting like a mini wedge here, where it's trying to figure out what it's going to do. If you do count the candles, there's more green candles than red candles here. I see four red, and we're on our 5th green. But I guess that could go either way with 1:36 to go on the candle. But overall, this looks like a bullish consolidation period here for me. Someone else might see it and see something different, but I'm taking into consideration everything that's happened prior as well. The only sort of downside, I guess, is that we are nearing sort of high levels when it comes to the daily charts. I mean, we're in sort of almost uncharted territory apart from this massive spike here. But it's not like we're at the very peak, right, and we're creating new highs. We go to the weekly chart and we can see, throughout 2019 it has been at much higher levels. So there is, there's plenty of room for it to head up here. And while I'm talking about that, I already know I'm not going to take a trade on the AED USD, most probably, because the signal is going to be a buy signal, and I don't feel comfortable getting in that trade where it's at. So let's have a look at the GBP USD and analyze that chart a little bit to see whether or not we'd be looking for a buy, which is most likely the signal we're going to get. And we probably, I'm guessing, are going to get in a few seconds, because that looks like a pretty good buy to me on the 30-minute charts. Seems like it's sort of got to this level, pulled back, hit some support, bouncing off, and it's going to continue on its upward trend. 1 hour chart looks solid, very green. We're not sort of buying at a high like up here. So I would be very surprised if we don't get a buy signal for GBP USD very soon. Looking at the 4-hour chart here, we've got plenty of room there. We'd only be looking for about a 2-to-1 return, so our stop loss would be about 16 or so pips, and our take profit would be about 30 in this range. So I'm calling it. We're going to see that very shortly, because I've been watching this enough to know generally how the system thinks. It might actually wait until we get up to this level again. Now there we go. Look at that. Called it. So I'm going to take that trade. Oh, I don't have the fucking calculator on here. 14.4. So I have I coded in. Let me actually just talk about that after I take this trade, because I need to focus. 0.38 and buy. Well, it sort of pulled back a little bit there, because I think that should be good for us. Let's just hope it's not creating a high here. So I did, now that we're in the trade, I did, what did we get in for actually? 1, 2, I think we got in just above our entry when you take into consideration the spread, but that's fine. So I made a change to the lot size calculator, and I factored in that 80% rule that I was talking about before. So on this, our stop loss is only 80% of the predicted move, so it's not going to be the full 14.4 pips. It should be around about sort of 11 and a half or something in that range. So as we enter, you should, I'll show you that. So stop loss is 26003. Take profit is 6344. 334. So let me show you exactly where. Bearing in mind we didn't get in exactly at our correct level, but yeah, so it's about 11.7ish or so. So the change, it's small, it's not massive in terms of pip value, but as I said, it works out to be a big difference when it comes to your actual risk reward and the overall profitability of a system over a large number of trades. So we can tweak that to be even better, and we probably will. We're going to get a few more losers because of it, but it's going to work in our favor in the long run. Yeah, so we had quite a bit of a up move there, and then some resistance on that candle. It still hasn't broken above, this level here, really. So once it closes above that level, I'm going to be a little bit more comfortable about this trade, and it looks like it's trying at the moment. We've got 30 seconds left on the 5-minute candle. It wants to. Yeah, it's looking good. Can it hold out? Final 10 seconds. Come on, one last push. There you go, boom. To me, that is almost confirmation. I think we're going to have a little bit of a red sort of down here, so it's going to pull back a little bit and create the low for the candle. So we're probably going to be looking at about the level of the line, maybe. hopefully at its lowest, and then it should continue up here as a green bullish candle. That's what my mind is telling me after watching the charts for far too long. And we can see our GBP USD is looking pretty healthy as well. So once it clears this level here, I'm going to be pretty happy if it does. But we still have plenty of potential for it to sort of close out at this level here. You know, if it doesn't make a close on this candle above that level, then there's a high possibility that it's going to come down and hit that stop loss. But it's looking all right now. So let's just keep an eye on it for the next 4 minutes and see what it does. I'm quite surprised that it's not pulled back a little bit, and it seems to just be continuing upwards here. Nice. Not complaining at all. So I also made a mental note. I was going to take a trade earlier, and then I realized, oh, hold on. We're 15 minutes before the London Open, and I know from looking at all of the data that our system does not perform overly well, or has not previously performed very well during the London Open. So I stopped and I didn't take a trade, which I think was right here as a buy signal. 9:40, yeah, I think 10 o'clock is the London Open. Yeah, so we were 9:45. We're on this candle. It was looking green, sort of. It was a little bit up, or it might have been down. I can't remember, but it was around this level, and we got a buy signal. And I sort of thought to myself, you know, I was pretty close to hitting buy. I'd entered in the information. I looked at the time, and I was like, oh shit, no. So we could have had a loser today, but just because we avoided an area of time where the system has been known to not perform that well, because generally speaking, I've noticed, at least for the last 2 weeks, during the London Open, the market has done the opposite of the overall trend. It has, for the hour and a half, maybe 2 hours after the Open, and sometimes up to 15 to 20 minutes before the Open, the trend has reversed before it has continued with its overall trend. But huge volatile swings generally happen during the early stages of the London Open. So I don't like to trade that, and I'd say that's a good idea for you guys as well, is to just not trade the London Open, at least until we tell you otherwise, until we can prove that the system is profitable over the long run during that period. But it seems to run at about sort of 30 to 40% accuracy, which is at a 1-to-1 risk reward, which is not good, considering it's sort of 65 to 70 most of the time. So both these trades are looking all right at the moment, but it's still very early stages. I'm not going to feel comfortable with this trade until it breaks above this high here. And when it does that, it should actually be pretty close to our take profit, because we're on the GBP USD. We're only looking for about a 1 to 2 return. So that's cool. I might even consider moving my stop loss a little bit higher at this stage, just so we only we don't lose a massive amount. Got a very strong sell on USD CAD. Out of curiosity, I'm just going to look at that. We're not going to take that trade because obviously it's only 4.1. But yeah, there's huge volatility there, and I guess that corresponds the opposite of what's happening in the GBP USD. I wouldn't be taking that trade anyway. I know it would definitely hit that level, most likely, the volatility or likelihood of it just spiking up a little bit and creating a candle high before continuing its downward move here is just too high for that level. And if we're looking for something like 10 to 15 pips, I don't know if I'd take that either, because we are already, most of the move has happened here. On this candle anyway, most of the move has happened, and you'll see what happens after these big candles is a pullback. So we get in at the bottom of that candle, and then a pullback happens, we get stopped out, then it continues with its downward. So that's my thinking here, is yes, I think this is going to go down, but is this a good entry place? And it may be. You may enter here and it may continue for another 20 or 30 pips downwards. The chances of that happening, not very high though. The chances of history repeating itself and it pulling back, it may not pull back much. You may get a situation like this where it's only 7 or 8 pips and it doesn't matter because you're not stopped out because you've got a 12 or so pip stop loss. But why would you not wait until you get like a green candle, at least one green candle, but probably a couple, and for it to reach probably the level of the last red candle? It seems to do that quite often, or at least 50% of it, 50 to 80% of it. You see at this, it's almost sort of gone the entire level before pulling back. I mean, it's not closed there, but you see that that's a consistent theme here. It's come back to almost that level. There it's come back to above the level of the last big green candle, bearish red candle. Here it's not really done much, but if you take that into consideration as a candle there, it's come back over 100% of it. So I'd probably be setting an entry price or a sell order at around this level, right? Because it closes this candle out. Still got 12 minutes on the 30-minute candle here, so could easily go a lot lower. But that would be an ideal entry point for me at around about that level, because then I've still got, if it does continue up a little bit, my stop loss is probably about 10, what are we on USD CAD? It'll probably be about 10 to 11 pips, right? We look at our ATR for the 30-minute candle, we're averaging 11 pips per candle for the last 200 candles. So we set it probably at about 11. I mean, we're trading on the 1 hour time frame, so it would be whatever we are here, 15 pips. So it would be, kind of probably at about that range we'd look to have our entry, and then our stop loss up here. That's a good trade to me. But it may not do that anyway. It's nice to speculate though. So we've got some pullback here. I was expecting that. So that's nothing to be startled about. And we got that now support line, I guess, that it's now touching. So I'm hoping it sort of closes around that level and it doesn't push much lower. And then it probably figures itself out for a couple of candles there, or starts forming a green candle straight away. Probably the same thing's going to happen here. I'm glad we did create a new higher close of the candle here on the 5-minute time period. So that's a confirmed continuation in my mind. Well, it goes towards confirming the continuation of the upwards trend. It is important not to read too much into the candles though, you can get a little bit overindulged, and it can start to skew your sense of reality if you you hold on to a trade for longer than you should, or you'll extend your stop loss or something. So it is good to have just steadfast rules where no matter what the candles are saying, you know what you're going to be doing in terms of your exit and your entry, and you're just going to let the candles and let the market volatility, the price action assist and help you with just understanding a little bit more about what's going on, so that you can make a slightly better informed decision. So to me, I'm going to adjust my stop loss at this level, because I am going to look at these levels here, and I'm going to figure out what the move has been in terms of the high or the close here, 24 pips, and then the retrace 12, so 50%. I'm going to do the same for this move, which I guess goes to there, 32, and we go down to sort of 5. I might actually leave my stop loss where it is, because looking at those, we do tend to have quite large swings. So 29ish, and we got our stop loss about 6. So yeah, I'm gonna probably leave it where it is for now actually, and wait till it forms a little bit higher of a high here. But when that's happened, we're probably going to have hit we'll come close to hitting our take profit anyway, so we should be good. So I'd probably expect at least probably a couple of candles here before it does continue upwards. If that's going to happen. Bearing in mind we're on the 5-minute chart. But we could have a huge spike in action that would just drive it up, which has been happening and does like to happen on the during the London. I actually need more experience trading the New York market and the overlap from the New York and the London. That'll be good. But I guess it's a good idea to just focus on one market and learn it in and out. If that's going to be the market you'll be trading, which more than likely will be the London market, regardless of my location for the next sort of wee while. Is when I head back to New Zealand, I'm going to be 5 hours behind ahead of my current time, which means at the moment we'd be looking at 11 p.m. And then the New York market's open in 3 hours from now, so not a great time for me to be trading, if I'm being completely honest, at 2 in the morning. I want to be fresh, or reasonably fresh, so I'd say I'll be trading the London, unless I get up really early, start my day really early and trade the New York after it's opened, sort of an hour or so after it's opened, which could be an idea. although I then catch the tail end of the London and the close, which tends to be a little bit of a haywire time. So not overly happy with what's going on here at the moment on the Euro Jacky. It's broken a lot lower than I wanted, and will probably continue down to, well, could go anywhere here. You know, it's looking like it might reach this level and it may even go lower. I'm not going to be rash. I'm only risking 10 pips and 1% of the account, so it's not that big of a deal. And it's a demo account, so it's definitely not that big of a deal. But even if this was real money, I'd be trading maximum $1,000 account, and 1% of that is only $10, so $10 is not an amount of money that gets the blood boiling or excited, you know, about risking. 1,000, yeah, that would be a little bit above what I'd be comfortable with losing. Even $100 in one trade at this point in time would be something that would probably be beyond my risk tolerance right now. But once I get some income coming in, I think I'd be fine with that, if I had confidence in the system, which I do. Let me just check the microphone's working. It wasn't working the other day. Yep, we're good to go. I'm really hoping this candle turns green or stays at about that level. That would be nice. Show that there is enough resistance there to maintain that level. And I would be hoping that we sort of bounce off our buy level here. Or at least show some support. Resistance. Support. We're above. Come on. Oh, that green candle on the 30-minute was looking so healthy. And we're not trading the USD CNH. We're going to be removing that. So we'll probably do that at the end of this week, I think, over the weekend. I'll tally. I should and I will tally the results for the previous 2 weeks just to confirm what we already know, and that the USD CNH has not been performing for us. It's too volatile, and we will be able to create something for it in the future, but really it's just about cutting the fat, focusing on the shit that's working, and making that better, making that into something that we can market as a product, getting some customers, getting some revenue coming in, hiring a couple of people to help out so we can develop the system a lot faster, then focusing on the more trivial things like the USD CNH or CNY. I really hate that it's called the CNH Oander and some of the other brokers. It's like, where do you get the H from? I don't understand. I'm guessing it's just because there's a conflict within their systems using CNY and that they have to use CNH, otherwise it sort of breaks something in the code. Maybe. I've heard of similar things happening in crypto. But whatever. We will just deal. So that's good. We got a bounce back. Confirmed support at that level, which is nice. And as I said, we got what we wanted with that candle that was slightly red. It turned into a green candle for us and confirmed a level of support there. So if these two trades work out to be winners, it will be roughly 6% return on the account just from two trades. So it will take our already nice looking 6% return that we have and turn that into a 12% return in the span of 2 days, which is pretty nuts. I'm getting ahead of myself, obviously, but even if we have a couple of bad days where we take, say, 3 trades a day and we lose for 3 consecutive days, we're still looking at a 3% return for the week, which is definitely a positive result. 3% return, even for the month, is not to be sniffed at, right? Not to be snibbled at. Compound that over the span of a year and you're definitely making more than you'd make with most hedge funds, definitely more than in a bank. Just looking at the pure raw figures, 3% a month, you're looking at 36% return, but that's without compounding. You compound that and you're looking at something closer to 50. So, you know, maybe not 50, but around 40. Some good numbers. Good figures. Yet people were thinking, oh, I've got to make 50% in a month. I mean, if you can, that's amazing. That's amazing. Don't get me wrong. I'm not saying you shouldn't try. I'm not saying you shouldn't do it, but you got to focus on the consistency. If you earn 50% 1 month, it's all good and well, but if the next month you're losing 20%, there's something awry there, because what's to stop that 20% from becoming a 50% negative month, and all of a sudden you're negative 20% with that extra 20% we're talking about. So that's the name of the game, consistency. I'd much rather be able to consistently get 5 to 10% per month results, and that's like amazing results. Right, if you're getting those kind of results, then you're home to the races, right? All you need is some equity to get started, a $10,000 account, and give yourself a couple years, you'll be a millionaire. No sweat, right? And then it's just about the psychology and being prepared for dealing with larger amounts of money. But if you're doing it at a slower pace like that, you should be able to manage the influx of money coming in and the influx of risk that you're having, because you're staying at the 1%. You might drop down to even 0.5% once you start getting up to the range of like $100,000 account, right? You might decide, oh, risking $1,000 per trade, that's a little bit more than I'm comfortable with, and that's purely personal, right? That is up to each individual as to what they're prepared to risk and what they're capable of tolerating. You know what their psychology is capable of tolerating. But the thing is, if they work their way up from a $10,000 account to a $100,000 account over the span of, say, 2 years, they should have been able to work their way up in smaller steps, rather than just going from having 10K in your account to depositing 100K and dealing with the difference immediately from $100 risking $100 to then risking $1,000. That's a giant step. That's a giant leap in money. But if you go all the way up and you're just stepping up sort of, you know, $10, $20 in risk every couple of months, maybe after a couple of months you go from 100 to 200 being the risk, then, you know, a couple of months later it's about 300, 350. It's more manageable, and you're obviously going to be withdrawing money along the way as well. So really what it boils down to is your relationship to money. It's how comfortable you are with that level of money and how reliant you are on that level of money. If you have no emotional attachment to that money and you've released all sense of that money belonging to you and saying whatever happens will happen, that I have accepted that money could be gone forever and I will be able to live without it, knowing that that money is gone and that I lost that money or whatever happened, right? And especially if you have a partner or a spouse, they need to also be in on that, so that you don't have that in the back of your mind thinking, oh, wow, I really can't lose this money because my wife or my partner will never forgive me. If you're thinking that, or you have any inclination of guilt, you should not be trading with that money. Just flat out, you're doing something wrong, and it will affect your trading, because it will be in the back of your mind regardless of how in control of your emotions you think you are. If you have some attachment to that money that restrains you from losing it, obviously you're not going to intentionally do it, but you can't predict what's going to happen, and the market is very unpredictable like that. So you need to remove all sense of attachment from that money, and it needs to just be there in your account with, you know, whatever happens to it will happen to it, and you just need to focus on the trading and making the best trades that you can, and making smart decisions without that shit in the back of your mind saying, hey, you're negative 20% on your account, you need to win that money back. What are you going to say to your family? What are you going to say to your friends when they find out that you're negative, you've lost X amount of dollars? Just something to think about. Oh, Euro Jappy, sort your shit out. Looking a lot more healthy on the GBP USD. And it's not to say that the Euro Jap is not looking positive. It's just, it's not yet made its decision overly clear as to what it wants to do here. I mean, sure, you could draw trend lines for all you want here and say there's a clear level of support there, and it's showing that it's slowly moving up, but that's definitely not, I don't know, that's just not a good support level. I mean, you could also sort of extend that out. Kind of across here, you can see it's bounced off the level. And that's the thing, with trend lines, you don't, it doesn't have to be perfect. Don't overfit a trend line. Just draw it where you see it. And you don't think about it too much. They also don't have to be completely parallel. I see lots of people, like, and I used to be guilty of it as well until fairly recently, trying to draw like perfectly aligned trend lines, and that's just stupid. You know, you just draw it where you see it, and it's going to be a lot more accurate than trying to overfit it. I still think this is a good buy. Like, I'd still be looking to buy right now. system's telling me to buy again AUD USD. Let's check in on it. So we'd been profitable in that trade from previously. I can't remember where the entry point was. Let's see if it's over on the analysis page. I think it was here. It could have been here though. AUD USD, is that the one that's just come in? 13.4. Oh, it'll be 13.5. Yeah, I think that's that one, isn't it? What's that entry? 70884 or 84? Yeah. Okay, so the previous AUD USD trade, this one. So we were looking for an entry price of 69975. So a little bit lower than we're at now. Well, 10 pips or so. So if we only were looking for 10 pips or 14 pips, we might have actually hit 69975. So about that level there. And the time was, I think we're going to need to change the time zone. That's something I haven't showed off as well. We have this time zone converter here. So I am in the Singapore time zone at the moment. So I convert it to that. Oh, but we've got a different time zone in the charts. What are we, 5 hours difference on the charts? So GMT plus 3. So we'll just chuck it on that. So 12:25 would be on the charts. So we would have got on, yeah, down here, that previous trade. So I mean, we were looking for 14.2, so we wouldn't have quite had our take profit yet. It was 995, wasn't it? 75. Oh, yeah, we're about 1 pip off. I think we'd probably hit that, but I mean, we would be looking for the Forex result. Sorry, three times result. So we'd be looking for above this level, and I'm not confident it's gonna continue up here at the moment, as I was saying earlier. I really don't like all these trend lines and things. We'll leave that one there. But it does seem to be obviously responding to something at this level, right? And I think that's just the the 22.200 level. Which is right there, pretty much where we entered. I'll delete that as well. I don't need that. It's a bit annoying when you can't even see your take profit on the charts, isn't it? And I'm not super confident that it's going to reach the take profit even. I'm pretty confident it will reach this level again, which would be a 2 point something percent time, or 2 point something times return, which we might look to scale out a little bit at. We might look to scale out 50% of our trade at that level, or at that level, just because I mean, What's it been saying on the 1 day forecast for the AUD? USD. USD. Sell. When were they given though? 12:30. Oh, we're not. Sorry, the Euro Jappy. I was a bit concerned for a second there. Still a sell though. Weak sell. Only looking for a 30 pips. I found that is a common thing with the Euro Jappy, or it has been, that they're trying to sell on the 1 day time frame, but the trend has been an uptrend on the 1 day. In my mind, that's an uptrend anyway. Like, it's fucking weird. Maybe there's an issue there. I think I'll take a note of that actually. Because it takes the last 18 days worth of data to really determine what's going on. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Literally from this bottom to the current candle. And it's always been a sell. Yeah, something's wrong there. It's trouble when you haven't been looking at the 1 day signals at all. I'll send that through to Armory a little bit later and see what he thinks about it. Oh no, we hit a... Oh, we must have hit our take profit. Cool. I think. Yes. I was like, whoa, one trade gone. 116. Why is that a little bit less than... Yeah. Oh, I guess maybe it was just a few pips lower, but it should have been about the same. Cocked up the calculation somehow. $14.4. Okay. So we got our entry price of 1.26118 minus our stop loss 1.26003. 11.5, which works out to be the 80%. Oh, there must be something in the calculation where I'm still using the... Yeah, that'll be it. But what does our take profit work out to be? So, take profit 0.26 334 minus 21. Yeah, okay, so there's the issue. So that should have been, it should have been more like 28.8. That should have been. But it's taken the, oh wait, no, it's not 2 times. It's 1.5 times 14.4. 14.4 times 1.5. Okay, so that's right. there's some calculation going on wrong in the code. I'll need to look into that. I think I know what it is. I think we're not marrying up the 1% to the actual pips risk. So the actual pips risk should be showing the updated value rather than the old value. Yeah, that's what it is. Okay, so I'll work on that after this video and figure it out. But still a winner nonetheless. It's just a little bit lower in terms of the dollar value that it should be. It should be at about $132, which would mean it should be close to about 140 actually, double this loss. Which means we should cancel out that loss and cancel out this trade, so it doesn't really matter what this trade does. Even if it loses, we should still make effectively 1% today. Well, it would be more because I already took a trade earlier today. So we're up now roughly probably 3.5%. Those two together, 250-ish. And our account value was 2,500, I think. Why don't I just leave the calculator open? I use it so much. What am I looking to do here? The other way around. 250 divided by 7,500. 3.3%, yeah. So definitely a good day, and even if this loses, we're still going to be up 2.3. So I'm going to cut it there anyway. I'm not going to take any more trades. There's no need to overtrade, and we've had some good trades today, as well as this one looking okay, you know. Definitely looking a lot better now than it was earlier. So I'm considering now moving the stop loss to sort of this level here, because we've identified that we have very strong support here. I do think there's a strong chance it will come down and touch this level again, even if it's only just a spike. You know, we've got this level of now resistance to break through. So the chances of it bouncing off there and coming back down, spiking down before continuing up, pretty high. So although it'd be nice to set our stop loss to break even here, it just has too much of a negative effect on the overall trade. So what I'm going to do is I'm just going to, as I said, I'm going to move it to around about that level, just to secure a few more, to risk a few less pips. So even if it does wind up being a loser, we're now only risking about 7 pips, which should work out to be only like 0.6% of the account. And I feel like it doesn't overly negative effect, put a negative effect on the trade by doing that. And I'd say probably once we break this level here, I'd be setting it to 0 to break even. Once we close above this level. Because we are looking for 4 times return here. And I'd say, what are we at? 7 o'clock. Oh, we've got 2.5 hours until New York opens. We're probably going to be well above that level by then if we do continue with the trend. It's good. So if we had just had a 1-to-1 risk reward, we would have just hit our take profit. As I said, I might look to scale out 50% of the trade at this level. But the thing is, when we look at the data of the Euro-JPY, which is our second pairing here, when we look at our 2 times results versus our 4 times results, we can see 24 times on the very weak signals that it went to the 2 times. Out of those, 21 times. So almost 100% it continued to that 4x result. Out of the weak signals, it was a little bit less. So 17 times there, 16 times it goes to 3, and only 10 it goes to 4. And out of the strong, out of 18, 15 times. So that is why it's a much more profitable system at 4 times. And that's what gives me the confidence to say, okay, you know, as we continue going here, by it making it to that 2 times or 2 times return level, which is about 20 pips above our entry level. So probably about here, yeah. If we make it to sort of this level here, the chances that it's going to continue are very, very high. So although I could scale some out there to, you know, secure some profits, I'd much rather just put my stop loss to 0 and let it continue to ride out and have no, at that point there's no risk for me, right? It is all about the reward. And you know, some people say, oh, don't be greedy, but there's a right time to be greedy, and there's a right time to be scarce or frugal with your money. So in my mind, that is definitely, it's a risk worth taking. But as I said, before that happens, there's a reasonable likelihood that we're going to bounce back down to this level, which is why I didn't put it to break even yet, but secured or risked a few less with our pips. So this is going to play out over the next couple of hours. I'm going to cut the video there. We'll do a analysis tomorrow. I'll do a video tomorrow as well, just to recap what happened with this trade, and probably recap a couple of trades that we would have taken earlier in the day, because I don't like to record straight away when I'm getting into my trading. You know, give it a couple of hours of trading, and then we'll have some interesting things to talk about. Okay, I'll see you on tomorrow's video. Please do consider subscribing if you haven't already, and hitting that bell notification so you're notified when we upload videos in the future. If you are interested in participating in the beta test, by all means get in contact with us, leave a comment below, join the Telegram group, which I'll put links in the description, or reach out to me through any social medias. Generally use the same social media name as I do on this YouTube channel, so just Drew Matt Gibbon -MLFX. Look forward to hearing from any of you that do decide to reach out, and I will see you in tomorrow's video.